City gas distributors, Mahanagar Gas, IGL both surged more than 4.5% after UBS issues a bullish note on the stocks. Now they're sitting with gains of almost 6% for Mahanagar Gas. UBS has upgraded IGL to buy from sell and raised the target price to 700 rupees. Also raised the target on MGL from 1600 to 2400, citing an improvement in volumes.
Ola Electric zooms 4% after a slew of brokerage notes. BofA Securities and Goldman Sachs initiate coverage on the stock with a buy rating, citing multiple growth triggers.
Bajaj Housing Finance continues to rally for day 2 after a big doubling from its issue price yesterday. The stock is up 8% today.
Torrent Park climbs more than 3% after the company enters an MOU with the government of Gujarat for the execution of a solar wind hybrid project.
And from one big listing yesterday to another big listing today, P.N. Gadgil Jewellers sees a strong listing on the bourses, listed at a premium of 73% at 830 rupees versus an issue price of 480 rupees, still holding above that 800 mark with a gain of 67% versus its issue price. You don't go anywhere. The management of P.N. Gadgil will join us shortly on our show to discuss the company's post-listing strategies. Good morning. You're watching us here on Chartbusters. I'm Mangalam Malu. Joining me today is Vivek Iyer. In case you've hit the snooze button for a while, woke up late, you haven't missed anything. As you can see at the top of our screens, the Sensex, the Nifty, absolutely flat, as is the Nifty Bank, mildly in the green, is the mid-cap index, which is actually under a little bit of pressure, down 0.4% as we speak. And as we speak, we have the broader markets, the breadth of the market, firmly in favor of declines than the number of stocks which are advancing. The number of stocks which are declining are actually twice the number of stocks which are advancing. So the crisscross lines come up for you, tell you that earlier it was firmly in favor of the green lines, thereafter there was a bit of an intersection, and now those lines far apart with the red one much above. Hi Vivek.
Good morning, and like you mentioned, it's the market breadth wasn't significantly, especially after a reasonably strong opening, considering the fact that we actually got in with a muted set of cues as far as Asian markets were concerned. But moving on, let's welcome Apurva Sheth of Samco Securities for a technical check on the market. Good morning, Apurva. How are you looking at the market at current levels? Are you seeing some exhaustion at higher levels, especially as far as the benchmark indices are concerned?
Good morning. Thank you for inviting me on the show. So for the last 2 or 3 days, Nifty has been range bound in a range of 25,450 to 25,330. So I think that there's a Fed event which is about to be scheduled later this week. So markets might take some cue after the event, and until then, the market is likely to remain range bound. So the call would be to stay on a wait and watch mode and let the market give a cue on either direction. And even the Bank Nifty 2 is range bound, so 51,800 on the downside and 52,800 are the two support levels that levels that we are looking at. And on the stocks front, since the market is now looking like it is there's some fatigue kicking in, so pharma has already made its move, and now FMCG is also moving higher. So within that FMCG pack, liquor stocks are something that we like interesting. So UBL is one which is breaking, which has a resistance around 2150, and we would like to go long on UBL with a stop loss at 2050 and a target of 2300. And next would be Radico Khaitan, which is forming a flag pattern. It is breaking out of it and looks like it is headed higher. So 2060 would be my stop loss for Radico, and 2360 would be my target.
All right, liquor stocks doing extremely well this week itself. Radico is up around 6-7%. 9% gain is what we've seen for other players like Globus Spirits, etc. as well. As we speak, Apurva, a bunch of these mid-caps, even though more stocks are declining than the number of stocks which are advancing in the market, some of these are seeing some traction. And one of them, most notable, is actually Blue Dart, which has seen a bit of an uptick right now, up around 4-4.5%. Typically, we don't see the stock be a big mover on an intraday basis and has been a bit of an underperformer as well, but now currently has moved higher with decent volumes backing it as well. Ola Electric is the other one. From its peak, it had seen a correction of almost 30-31%, but this morning there were a couple of positive brokerage notes. The stock opened higher and is now seeking higher levels, up around 7%. Your thoughts on these stocks? Is there anything in particular that you like?
So Ola Electric is something that can be traded with a stop loss at 105, and target could be the previous high. So that would be the call on Ola. Blue Dart has made a nice move after a long time. So even in Blue Dart, one can trade with a stop loss at today's low. So 8191 is today's low, and with that stop loss, one can go long for 5-digit target.
Okay, thank you so much for that, Apurva. Let's now shift focus to our special segment where we will get you a few ideas for profit from moneycontrol.pro. Lekha Badlani joins us from moneycontrol.com to talk about a stock that she is tracking closely. Lekha, over to you.
So we're optimistic on KIMS Hospitals. Its developing hospitals of Kingsway and Sunshine are ramping up well. Both units reported 25% growth in its inpatient volumes in its recent Q1 results, along with improving occupancy and operating margins. The ramp-up will continue at both these units, and we view them as key growth drivers for KIMS. Additionally, its new investments and upcoming projects will act as new catalysts. Its recent acquisition of 200-bed Queen's NRI Hospital in Vizag is a running hospital and doesn't require any major capex for the next 2 to 3 years. Thus, it will immediately contribute to the top line and EBITDA. Now, KIMS is also on track to add incremental 2,300 beds in the next 2 to 3 years. The new Nasik hospital will become partly operational in the second quarter. Additionally, 2 projects in Bangalore and 1 in Thane will commence operations by the end of this fiscal. Apart from setting up new facilities, KIMS is also working on improving its existing hospitals as it plans to add new specialties like oncology and mother and child department. Moreover, the company's efforts to reduce the ALOS, that is the average length of stay, along with increasing share of the cash and insured patients from the Sunshine and Queen's hospitals, should support KIMS' overall ARPOB going ahead. Currently trading at EV/EBITDA of 26 times FY26 estimates, we think the stock can be gradually accumulated for the long term.
All right, Lekha, thanks a lot for that. With that, we'll move on, take a short break. And on the other side, you don't go anywhere because we have the management of P.N. Gadgil Jewelers. The listing of today, Saurabh Gadgil, who's the MD, joins in to discuss their post-listing strategies. Stay tuned. Welcome back. You're watching us here on Chartbusters. Let's get straight to the management of P.N. Gadgil. Stellar listing is what happened on the company. Strong debut on the exchanges. Listed at a near 70+% premium to its issue price. Currently holding with a gain of 66% as well. Saurabh Gadgil, the MD of the company, joins us now. If we jog your memory, last week he was here in our studio talking about the growth plans for the company, FY27 targets of 10,000 crore on the top line with double-digit margins as well. Saurabh, it's been a stellar listing. The street has rewarded you with, a big jump up at the open, which also means that there is a lot more responsibility riding on your shoulders. So if you could once again iterate your growth plans for the company, at least for this year, with margin improvement, if you could give us those numbers for the viewers who are watching right now, because a 70% premium to issue price also implies the valuations have expanded a lot more than what you had asked for.
Thank you, Mangalam, and I want to thank everybody for such a great, amazing response to the listing today. Like you rightly mentioned, that's what even we said in the speech here, that this comes with a great responsibility and a commitment to, excel in our business, bring more efficiencies, keep growing. And I always say that, we had 3 pillars: our customers, our karigar, and our employees, and now the 4th pillar, the investors. And this is what we'll be focusing on and adding value to each one of them. So that will be the company's endeavor, and we stand committed to it.
All right. So growth plans for this year and the next few?
So like I mentioned before, the growth will be in additional number of stores. So, as per DRHP, we'll be adding 12 stores. So that's the immediate plan. And we'll be finishing the second quarter very soon. So Mangalam, at that quarter, we can discuss more about the results and more about the strategies ahead. But today is a big day. And I would like to just assure everybody that, the company, the management stands committed to its business, to its growth, and to delivering value.
Saurabh, okay, so let's start with the store count. last time you came here and you mentioned this here, you said that FY27 you expect to add 60 stores, okay? Also, what you mentioned last time was that when you're talking about the top line, you expect to see 1,000 crore top line, double-digit margins, and you also mentioned as far as the FY24 was concerned, you were impacted by a couple of one-offs as far as the margin was concerned. So FY25, what will be the improvement on the FY24 margins, and can you reiterate these numbers, and could you break down FY25 and FY26 for us?
See, guys, those were numbers which you spoke, and they were aspirations. Like I'm saying again here, that yes, definitely we aspire to be the largest jewelry player in India, and that's where the number came from. That today, the leader today is at 55 plus stores, and to be number one, we have to be at 55 to 60 stores. That's what the first aspiration of the company is. When it comes to margin, our focus is increasing diamond share, is looking at efficiency, is looking at economies of scale. So yeah, there are good aspirations to further increase margins, increase the top line. But I think let's talk about this, in September end, when we are out with the second quarter results. That will give us a better idea, and I can be able to throw some more details into the margins and the plans ahead.
All right, we'll talk about all those specific numbers after your quarterly numbers, Saurabh. I just wanted one data point out of you. What is your proportion of gold on the books which stands unhedged right now? Because there's been a big rise in gold prices. So as a result of which, you would be seeing some inventory-led gains as well. If you could give us a sense of your gold on the books which is hedged versus unhedged, and what could the rough gains on this be?
So see, we need to do the exact calculation. What we had, with the budget import duty cut, the prices going down, and now prices rising back again. So all in net, if you look at, I need to come back with the exact number to you. But as far as hedging was concerned, we were around 35% hedge pre-listing, and like we have mentioned before, we stand committed to be, hedged to the tune of 70-80% as we go ahead. By that I mean in the next 6 months. As part of our IPO proceeds, we had said that we'll be using it to repay the bank loans, to take non-fund limits and use them to take gold metal loans, and that would be the tune for us to hedge. And post that, we should be on par with the market leader, with the market trend of around 80 to 90%, being hedged. As far as the number is concerned, the September end is right, just 10 days away, and in that we'll be able to share the exact gain which or loss which could have risen due to the price fluctuations.
Saurabh, right now as we speak, gold prices are flirting near the all-time high levels. So seasonally or historically, during such times, how do you see consumer sentiment get impacted? And secondly, right now we have two important events. Number one is the Shraddh season, and number two, upcoming festive season. So historically, what kind of growth do you see during such events?
So, even when gold prices are rising, it all depends upon the whole environment, where the scenario for the next 3 months, next 6 months, in the minds of consumers at large. While the view on the consumer level is that gold seems to be bullish in their perspective, and there's a huge interest in buying gold, investment or for jewelry. And I think August has been a testament to that. So as till now, mid-September, pan-India, there have been good sales. And I think the trend should continue ahead. We are looking at a very good season for Akshaya Tritiya, for Diwali and your Navratri. And I think the third quarter is always a good quarter, and I see that with this, the rise in consumption, the rise in move to organized segment, the sector looks good, and I think as a company we are hoping for a bumper Diwali this season ahead.
All right, a bumper Diwali this season. Final question before we let you go, and this again is on strategy, because you are largely Pune-focused, Maharashtra-focused player right now. There are two ways to look at it. One is that because you're regional, you enjoy this trust, you enjoy this brand salience, etc. in that particular region, and you are pretty strong out there. No one can compete with you in your area of operations. However, the other challenge is if you expand, then replicating this same brand strength, same brand salience and generations of trust that you've developed in one area becomes a lot more difficult. So how do you look at this as a strategy going forward? Because outside of your comfort zone, competition would be a lot stronger, right?
Absolutely. What we really stand is is the legacy of almost 200 years. And with that comes with this, a generation of customers who are not only in Maharashtra, but also a lot of different states of India. So like we mentioned, the strategy would be to go into states first, which are on the borders of Maharashtra, where there's a strong brand connect, where we already have customers who are, consumers or who had been consumers. And I think it's going to be a strategy where we'll go to a state, look at that state, be able to be relevant there, be able to offer the kind of designs, the kind of services which are the need of the state, and we'll grow in a very phased manner. So like we have been mentioning before, we don't want to grow in a haphazard manner. It will be a state-by-state growth. It will be a strategy which will be backed by a lot of market research, a lot of understanding, and then moving ahead. But the biggest factor which is in our favor is the understanding of consumers. For the last 20 decades, she's seen the evolvement in terms of consumer preferences and being able to have strong relationship with suppliers, with karigars spanning over 100 years. And I think that is what will be the main advantage as we move ahead. But yes, the task is going to be on a different level. It's almost like saying you're playing cricket on a home ground versus on an international pitch. So it's a different arena, a different challenge. But the company is sure that we'll be able to overcome it.
Right. Saurabh, thank you so much for joining us. Next time you join us, we hope to get a lot more specific numbers out of you. But for today, congrats to you and your team on such a stellar listing. Let's move on and slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're watching Chartbusters here on CNBC TV 18. Well, a couple of stocks that's hit the eye exactly in terms of how exactly they're moving in today's session. First, select NBFCs today are actually bucking the trend. Yesterday, you did see quite a bit of a sell-off after Bajaj Housing Finance, very sharp up move on opening day. Today, a little bit of a bounce seen as far as Bajaj Finance, Bajaj Finserv is concerned, and Shriram Finance too, seeing a bit of a bounce back. But the other end of the market that's not doing so well today are actually some of the tire companies. So if you look at names like Apollo Tyres, MRF, Balkrishna Industries, CEAT, they're seeing a little bit of pressure in the trading session. And even in the auto space, when you're looking at select two-wheeler companies, TVS Motors and Eicher Motors today are witnessing some selling pressure. But moving on, one stock from the power space that we are tracking today and that's seeing quite a bit of an up move, cooled off a little bit from the day's high, is actually Torrent Power. Now, a whole host of power companies are currently in Gujarat as part of the Renew Summit, and there have been details coming out as to some of the commitments that these companies have made as far as the Gujarat government is concerned. What is it that Torrent Power yesterday has told the exchanges? Remember, they sent out two releases yesterday. The first release was that they mentioned that they're going to be setting up close to 10 gigawatt of renewable energy projects by 2030 with a capex of close to 57,000 crore. Now, they've also signed an MOU with the Gujarat government for evacuation of close to 5 gigawatt of power capacity, and this is going to be a hybrid solar or wind project. Now, talking about Torrent Power itself, what is it that they've been targeting, and how does this particular release or this particular announcement tie up with the company's long-term targets? Number one, FY25, they expect to add close to 300 megawatt of renewable energy capacity, FY26 close to 800 megawatt, close to 2.5 gigawatt in FY27, and all of this will come in at a capex of close to 20,000 crore. So from FY27 to FY30, some more significant capex lined up to go ahead and meet the target of close to 10 gigawatt of renewable energy capacity. So the total capex envisaged by the company is quite large at close to 57,000 crore. No wonder then the stock's doing quite well.
Absolutely, the stock's doing well, though just keep an eye on a bunch of other stocks as well, which are doing well. When we started the show, the Nifty was virtually unchanged. That has changed now largely because of the way the Nifty Bank has moved higher. Remember, the Nifty Bank has been outperforming, currently at the high point of trade for the Nifty, comfortable above that 25,400 mark. It's led by the Nifty Bank, which in turn has been led by a couple of these private sector banks. So pull up the intraday chart of something like a Kotak Mahindra Bank. That's spiked to the high point of trade, has been doing well all through this morning, despite the weakness that we're seeing in some of the larger weights on the Nifty Bank. Case in point, something like an HDFC Bank, which still is in the red. Kotak Mahindra Bank is putting its hand up. And the other one, which is actually doing well, is ICICI Bank as well. That's not the only one. Our ticker team tells us that, the two-wheeler stocks are extremely well bid in today's trading session so far as well. So we have something like a Hero MotoCorp and Bajaj Auto, both of them which are at the highs of today's trading session. So Hero MotoCorp up for you at the high point, and alongside that we have Bajaj Auto as well. And finally, before we take your leave on this edition of Chartbusters, just pull up the intraday chart of Vedanta. This morning we were told that there is some sort of relief coming in on Vedanta in terms of some of the environment related issues with their alumina sourcing capacity, and now the stock has bounced right back up around 2% at the high point. With that, we're out of time on this edition of Chartbusters. From Vivek, me, the entire team, thank you for watching. Trading Hour comes up next.